Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro weaken a bit here. Let's take a look here. The Bund is coming off its lows, but it did make new lows. Let's go on and move into there real quickly. You can see here where we move to new lows here in the Bunds, which would be supportive for the euro, actually. But and we saw the euro coming off those lows yesterday, or actually, defending that lower area yesterday, and we're actually seeing the Bunds come up a little bit, but it's still close to new lows, and certainly it's not providing that support for the euro at this time. Let's go on and move back into the main screen. You can see it's coming off here. Let's go move into the euro on the daily. Now, we are still holding above this area here, but for bulls, it's got to be a bit of a concern here, looking for better prices. Speaking of, let's take a look at the cash dollar index. And we talked about this last week, is, when we broke through 97.89, that still continues to be, which is a big weekly level, continues to be resistance. We haven't been able to take it out. You can see that here. Now, we do have some minor resistance above that, which comes in right there. You see that 98.11 right there? Right there, 98.11, which was a retracement after we bounced off of this 97.89, which is quite the feeble retracement. I mean, I remember this is from not last week, but the prior week. My target was for us to get down to 97.89, but I thought we'd see a nice bounce off of that, and the bounce was all of 21 ticks before it rolled over. So that still remains resistance. We may be able to get above that, but it's not going to go in and change things until we were to get a weekly close above 97.89. So we could come up to 98.11 and still stall. It would take a much higher move, and we'll get into that in a little bit. This was referencing here in the Bunds. We did see a pretty decent move here in the crude oil yesterday, and we'd referenced that, and key level. Actually, we had done. I think we'd mentioned here in the webinar, but I'd mentioned in the chat room. I do remember mentioning in the chat room twice. The key levels for the day were 56.90, 57.15, and 57.33. And we got as high as 56.92, and we rotated lower, and wheels came off the caboose. I kind of used what I did was actually I used a template for what we saw in the gold on Friday as kind of like what would potentially happen. And we're still seeing crude oil move to new lows here. And because once we got up to that high, we really rolled over and we took a pretty good bath that day. And then we kind of worked a little bit higher, and we took another rollover. Well, we haven't really worked hard at all in the crude oil, but I was using this kind of as a template as what gold had done. And we came off so hard that Friday, and I thought, okay, if we get a little bit of bounce, it's still not over, despite pulling back. And so we're going to see how far we can pull back. But yeah, right now we're on our lows. I mean, we just set new lows off by just a couple of cents right now. This is a big area here. This is the area that they actually broke out of. Remember, this is where they took off, and after we finally got this buy here, and we really ripped up, and then we moved even higher, and we challenged. And once we couldn't fill up in here, we weren't going to make it up here. Then this is where you saw a lot of longs liquidating. Yeah, and then she's over here talking about the Bunds breaking down. And they have, although we have, and I thought this was going to be beneficial. One of the things we were looking at yesterday was the Bunds were breaking down. But, we said, we're touching the bottom part of the zone. I still think even if we make it either low, we'll kind of hold or try and hold. And they are trying to hold, but it's not providing any real support for the euro whatsoever. S&Ps are still up pretty much close to their highs. And gold is a little bit of a rebound, at least on the spot at 14.95. You can see in the futures it's 14.96.30. We are seeing the euro odd. Look at that. That's breaking down too. So we're just seeing euro weakness across the board. Because one of the things I looked at, you would have thought, okay, well, the euro is really breaking down. The dollar index is probably pushing up much higher, and it hasn't even got up to 97.89. And here's the euro breaking down. So look at it, it's breaking down against, well, I mean, you see it pairing back against the yen, but well, that's even surprising too, because look how weak the yen's been. So look, it's pulling down there, it's breaking down against the euro odd, and has paired back some against the euro kiwi, or the euro kiwi has. Aussie yen is also pairing back. Let's go in and slide back into the main screen. We just about made it to that secondary resistance. We've had 888 on the dollar yen, which you got past that. And the key level is 927, but we had mentioned for the prior week, there's a little secondary resistance at 908. Actually, it looks like that line comes at 907, and they kind of rotated lower off of that. And you can see here the cash dollar index, even though the euro is broken down, we haven't even quite made it even to 89, but now the euro is not at its lows, but it certainly is weakening here. Let's just go in and take a quick look at the news, economic data, that is. And with the time change, that has also thrown a little bit of a hiccup in the news, economic data that we do get during the webinar hour. Generally, we used to see the UK data and whatever else, European data. The only thing we did get earlier was nationwide housing prices here for the UK, which came in 0.2% stronger. And we did get French consumer confidence, which came in at 104, which is right in line with the poll. But Italian producer prices will not be until the top of this next hour. And then UK data with its consumer credit, mortgage lending will be at the bottom of this next hour. As we come into the States, we will have Case-Shiller, and that's going to be at 9 a.m. Eastern, and consumer confidence at 10 a.m. Eastern. As well as pending home sales. We do get Texas services. We did get manufacturing yesterday, so it's a Dallas Fed services outlook. With that, we'll go in and take a quick look at the news, and then we'll just move on to the analysis, so bear with me. Cautious trade optimism boosts the Kiwi and the Aussie. We're actually seeing the Aussie pair back a little bit, especially the Aussie yen. We have a little bit of a gravestone doji that formed in the prior 2-hour bar. Hopes for easing in Sino-U.S. tensions buoyed trade exposed Asian currencies on Tuesday, while growing expectations the U.S. Federal Reserve could take a wait-and-see approach to further ease and underpin the dollar. Most moves were modest, though, as caution tempered the move. Aussie and New Zealand dollars each rose nearly 0.3. Global risks remain, but have shown some signs of subsiding. China's U.S. trade tensions have stopped escalating. The Fed has reason to sound less dovish on a half-full narrative for the U.S. economy. Trump said a trade agreement looked to be ahead of schedule on Monday without detailing the timing. The U.S. also said it was studying whether to extend tariff suspensions due to expire in December. That allowed remarks late last week from both U.S. and China officials saying they were close to finalizing the deal, driving equities and bond yields higher on Monday. The Aussie dollar hit its highest since Wednesday. This is one of the points I was arguing over the weekend as we came into the analysis was like, golly, the news isn't even, it's been okay. Here's equities at new highs. We can't even really do anything with the Aussie. But finally we saw that, come through in this Asian session. Says while the greenback held on to overnight progress against the yen to stand at 897, we're actually a little bit lower right now. China's central bank leaked its official yuan midpoint to the highest level in over 2 months on Tuesday. Beyond the trade headlines, the major focus this week is the Fed meeting. The U.S. Central Bank is expected to cut rates for a third time in a row when it concludes its 2-day meeting on Wednesday. Investors are watching for an indication further cuts are likely, with futures prices suggesting more easing expected in 2020. The foreshadowed forward guidance will be the thing, says Westpac analyst Emily Spitzer. It still looks like a done deal that they were cut, but then the risk is that they may characterize that as just one more insurance move. The market will have to take out the price as it goes for the future date. The British pound nudged lower to 28.55 with the Brexit hanging in the balance. The European Union has agreed to delay Britain's exit for up to 3 months, but the country is politically paralyzed. And overnight, Parliament rejected PM Johnson's third attempt to schedule the December 12th election. Johnson said he would try again, but a different legislative route would only require a simple majority other than a 2/3 majority. Gold subdued as equities jump on trade hopes and focus on the Fed. Gold price were a little change on Tuesday, hovering around the 14.90 an ounce level as progress in China-U.S. trade talks its equities higher, while anticipation ahead of the more central bank meetings in the week provided some support. Furthermore, the U.S. Trade Representative, the lead U.S. trade agency, said there could be an extension of trade test suspensions on the $34 billion of Chinese goods set to expire December the 28th. There's a broad risk on sentiment with U.S. equities hitting a fresh record high. The trade talks are highly unpredictable, and it's disappointed investors many times in the past and may repeat again, said Margaret Wang, market analyst at CMC Markets. The market is very positive about it right now, but also means it's very vulnerable. The EU agreed to a Brexit delay of up to 3 months, but Brexit hopes hangs in the balance with British politicians still arguing over how, when, or even whether the divorce should take place at all. So let's go move into the analysis. Since the euro held support above 1070 and closed above 1096, where resistance remains 1030 for the bulls to overcome in the short run. So once again, there hasn't been any real change here with the euro. $10.30 is still going to be, and I put 10.30, didn't even mean that, I meant to put 11.30. But resistance is going to be 11.30, and this support is coming in at 10.70. It's holding that area here. And 1065 is a 38%. Move this here. There we go. So we had the 1065, which is 38% from yesterday. That stays the same. Resistance, as I said, is 1130. That's going to stay the same. I put in there 1030, but it's 1130. I think that's pretty clear considering we're above it, but still. Let's go move into the cable. Cable is retaining the bid, resisting the easy slide back. Immediate support is 2763 with resistance at 2913. So we could have easily slid back, and we're actually holding okay. So, but there's not a whole lot of changes. I mean, in the sense that it's still a relatively tight range when you consider the big monster moves that we had. Look at this here, here, here. Even this day, we really saw the market come back and forth, and also this day. And look, the ranges have really tightened up. So I said, you know, it's resisting the easy slide back. Let's go with this here. But support's going to be 2763. You can see that there with the 23%, and resistance is 2913. And let's go move into the Aussie dollar. So it says the Aussie was able to bounce back to start the week, breaking the slide. Despite the strength in equities, Aussie should be higher. Resistance is 68.80 and support remains 68.09. So as I mentioned here is, you know, that was one of the things that when I was doing the analysis, I'm thinking, well, wait a minute. I mean, what's going on here? Equities are these new all-time highs, and we can't even get above the resistance up in here. So that's what I was indicating was they were able to bounce off of these lows, but to break this slide that we were at towards the end of the week. But despite the strength in equities, it should be higher. Well, resistance does continue to remain at 68.80 with resistance support at 68.09. So there we are. We've moved off of those lows, but we're still far from what we should be. And just correcting something real quick. Let's go move into the Kiwi. Boy, this thing looks sick. So it says the Kiwi continued this continued the start of the week on the defensive. The pair should find some value support at 63.23 with resistance at 67.07. And let me see. I don't know what we'll put that at 67.07, but we've got 63.23 for the support and resistance. And I guess they're at 64.07, and I put 63.07. Let me correct this one moment. And defensive is, we would have expected a little bit better move here. We can't even get past 63.89, although I thought to a certain extent, I don't want to say this would be a foregone conclusion, but I thought, okay, we'll be able to get back beyond that. And plus, we were starting to move a little bit higher. So once again, the real resistance should be 64.07. So we even had to lower the sights on that, with support coming in at 63.23. But this looks, if you think with equities that, supposedly U.S. Trade tensions getting better and equities all-time high, and we can't even get even past the initial resistance here. It's not looking good at all. Moving into the dollar CAD. The dollar CAD is doing its best to hold the fort down above support at 30.43. Initial resistance is 30.83, followed by 31.08. Well, as I said, we're doing the best to hold here, and that's been a support I put on there. It's been our support, I didn't think since Wednesday or Thursday of last week. So it's still trying to hold its own here. We're not seeing any kind of a pop, to say the least. So it certainly looks like it's vulnerable, but until it's broken, it's still holding there. So we got 30.43, and then here's our secondary support at 31.08. But as we say, you gotta crawl before you can walk, and walk before you can run. So initial resistance is going to be at 30.83, which isn't even that far away. But certainly we just seem incapable of getting any kind of a lift here. Let's go move into the peso. Well, we had our bias chart support at 1902, and 1902 held to the pip. Says the dollar peso held the bias chart support at 1902, rebounding to 1912. Resistance remains at 1916, followed by 1920. So we held there at the 1902 area, which our secondary support we had since last week. Remember, we had 1908. We tagged that, and 1902 was our secondary. And right there, we actually just dipped just a hair below 1902, and then we rebounded. But resistance is going to be 1916. So far, it doesn't look like I've been able to get much past that. And 1902 is still going to remain the same for now. And still relatively quiet. I mean, I guess things are keeping themselves in check until we get past FOMC. But not a whole lot of movement here. Let's go and move into the dollar yen. The dollar yen got past resistance at 888 and just above 109. Major resistance and the pivot is 927. A daily close above that would open potential to 1050 for starters. So what we're going to do is now at this point, we did get past 888. We kind of paired back in. We actually moved up beyond 109. But this, as we come into the Bank of Japan and also the Federal Reserve, but I think this has more to do with the Bank of Japan, we're going to have to, this is the main key level, and that's going to be our resistance, which is going to be right here. at 927. And this should be bullish. I don't know why I've kept that as bearish, but it should be bullish. And on the downside, for now is going to be 839. 839 on the downside, which was an old support that we had before. Let's move into the cash dollar index. The dollar index started a week a bit on the defensive. Resistance remains 97.89 on a weekly close, with the next level at 98.11. The dollar index would require a daily close above 98.65 to reestablish the bullish upside. So, yeah, that's, we're not that far away from 97.89. We came up those lows, yes, last week, but we weren't able to close the deal, and that's been key resistance. But could we get a little bit higher? Yeah, but that first line of resistance, remember I told you, was that little rebound high, which is really pretty weak to say the least, which is 98.11. So we're going to actually put this right here at 98.11. That 97.89 is still there, but like I said, can we poke our head above it? Sure, absolutely. But this is still going to remain bearish because, once again, like I said, we would have to close the week above 97.89, and that would only offset the short-term bearish outlook. We would actually have to close above 98.65 to say, if we close above 98.65 on a daily close, then that'd be reestablishing the bullish sentiment. Support's going to remain the same here at 97.46, so no changes there. And with that, we're going to move into the cross rates. And crude oil continues to move lower. And I was just looking right now, or just a couple minutes ago, and we got a bounce back up. I mean, we got up to about almost 55.40. And I'm looking here and I go, yeah, you keep thinking it's going to move a little bit higher at this point. And wham, we just dipped in the D's contract down to 55.17. Now we're 9 cents off the lows, but holy smokes, another new low. I mean, it just keeps dripping to new lows. Looking at the Kiwi Yen, I mean, we did go in to come up here and tag this resistance level at 69. I guess it's 46. I'd actually given it the benefit of the doubt at 69.78, thinking it was going to turn things around. But all we did was we made it just right to there. We couldn't even make it up to there. I thought we might be able to challenge that. That will still remain resistance at 69.78, although this is a good level here. Support is going to be the same, remain the same here, which is going to be 68.70. A break below that. So they still have the opportunity to hold, but it's getting a little bit concerning because we just quickly got turned away here. You see, but the resistance still remains the same at the 50% here, 69.78. So no changes, although the Kiwi Yen is looking weaker. Let's go and move into the Euro Yen. So we're still trading in the confines of this buy support resistance zone. And with the BOJ, I don't want to make any changes here. It's just going to stay the same for now in here. So the downside is going to be 2038. Although I may have made the changes here. Yeah, 1973. We actually did this analysis on the daily. I'm looking here on the 2-hour chart. That's going to be it right there, 2037. It's not that far away either. But with the BOJ, I want to stick to that, 2037. Or within this 2-hour chart. And on the upside, that remains the same, 2111. So let's go and move into the Euro odd. Man, breaking down. Look at that. So we come here right to this 50% here. And if you look in here, you see these touches, these volume touches right there. So it's going to be 6160, 6160. And on the upside, not looking good for the, overall you'd say here the 6305, but you got to adjust this obviously for what the expectations would be, which not looking good. 6269. Now we have been trading within a range, but and it'll still hold, but 2 consecutive days, or actually a break of this, will turn this into bear. So we'll still keep it within what the bias, which is range. Let's go and move into the Euro Kiwi. I'm kind of running out of gas after this 3-day rebound here. And that's on the daily. Let's take a look here on the 2-hour chart. This has more to do with the weakness. We're seeing the euro. I mean, it's trying to make a move higher because of the weakness in the Kiwi, but the weakness in the euro has kind of offset that strength. Both of them taking turns on which one's the weaker. Short-term resistance is actually going to come in right there to 75.02. Within this tight range is going to be 73.66. And let's go move on to the guppy. Well, we saw this rebound yesterday, and this actually went straight to our bias chart resistance. We can see that, and we just hung around there. That's 40.25 on this 2-hour chart. Would be a bit different from what we did on the daily with 40.25. Oh, on the daily we had 40.38. There it is right there. Let's go with 40.25. This is the daily right there, 38, but it's 40.25 on the 2-hour chart. We look at the dailies when we start out the week, but you can see clearly that it's had some trouble with that, this upper zone here, bias chart resistance. And the support, no changes here, at least from what we had here. May have been a little bit different level for the daily, but we'll go with the 2-hour chart, which is going to be 38.87. Wow, we had some pretty good room here. We're going to go with this 38.20 because I'll tell you why. Because the Bank of Japan, we potentially will be looking for some big moves. So you can see why. I mean, we're way up here, so we can quickly dip down here. So it's not going to be any changes here on the guppy on the support side, 38.20. It is a bit of a range, but as I'm saying, we could see some big volatility coming up with the Bank of Japan. With that, let's go move to sterling odd. Obviously pushing lower because we've seen strength in the Aussie dollar. But we have come here right to support. And that's going to be 87.30, which is on the 2-hour. We'll see what we had on the daily. 86.84 on the daily, 87.34, and that's actually holding here. We'll still stay with this. We're going to stay with the daily only because the starting has been holding its own, but it still has a potential to go on and tick down here lower. So we're going to go and keep that one in check. And on the upside, these are two daily levels. On the upside, I am going to revise this down to 89 even. It's held so far, but this is that extra line right here, which is really 86, 82. That's where we're coming, that level right there. So that's going to remain the same here. So that will stay the same. We'll go in and take a look here. And you can see here, crude oil continues to stay very, very weak. Very weak. We did come into a level. Let's go move into a different chart here. You can see S&P is weakening a bit here. Gold's just kind of holding its own towards a separate area here. But let's go into another screen. Look at the crude oil. This thing is really come under some kind of pressure. Look at that. Now I do have a little bit of a little hammer bottom, and we did have some support at 55.20. So we'll try and see if the market can hold its own. Now that's only on a 5-minute chart, but certainly we still are quite weak. And look at euro. Pressing even lower. It's, we do have support at 1065 because remember, that's going to be the 38% here. But we may have to come down here and tag that before the market tries to find some bids in here. but we're still trading in a relatively tight, very, very tight range. Boy, just right on the lowest pressing that. Cash dollar index almost at the 97.89. Remember that bias chart resistance is going to be 98.11. Dollar yen is just continuing to pare back a little bit, challenging that prior resistance level, which is 8.88. And let's take a look at the Aussie. And some weakness here in the Aussie too, after trying to open or have a little bit better strength. And dollar peso still a little bit on the weak side here. We did see a rebound off that 1902 area, which we mentioned yesterday, but still relatively weak. And that's all we have for today, but thanks for joining us here on the European Crossover webinar. Good luck trading, and we'll see you in the chat room. And of course, we do have the FX Daily Roundup at 12:30 Eastern.